Good afternoon, everyone. I'd like to get started here with our final session of the day, which will be Innovation in Global Payments. And to start, I'd like to introduce our speaker, Kalli Heupel. Kalli is currently the director of our foreign exchange team, where she leads a team of professionals and assists corporates and finance institution customers with foreign exchange transactions, international treasury management, risk management solutions, and cross-border payments and digital strategies. She holds a BA in professional accountancy from Augustana University and an MBA from the University of Nebraska. With that, let's have Kalli take it away.
Thank you, Mike. Okay, hello everyone. So today we are going to talk about innovation in the global payment space. But to start our discussion, just want to start on everyone's expectation and the need for speed. So real time has become our standard in everyday life. Seems that everything can be done quickly, and that's become the expectation. If we can't do it now, if we can't see that it's being done now, it's like we're disappointed or we're wondering why that can't be faster. Just some examples: searching for data, whether that's a piece of trivia or a phone number, anything is a click of a mouse, a Google search away. We can pull up that information very quickly, where in the past it might be needed to reference books or articles, might require a trip to the library or something, but not that access just at our fingertips. Another, which has escalated because of the pandemic, is ordering food or groceries. What used to take us a trip in the car and walk down an aisle, now we can do that on our phone in a matter of seconds, and that food or grocery order is at our door in a matter of minutes. Sending texts or pictures, no longer do we need to develop film, wait for that film to come back, and maybe send grandma a picture in the mail. But we can, within seconds of snapping that photo, we can get it in the recipient's hands. And watching media content, whether it's Hulu, Netflix, YouTube, basically anything that you'd want to watch, pull it up, it's there. So because of all of this innovation in other aspects of our life, we're wondering, why can't we get funds either across town or across the globe as quickly as we can do these other items? So why do we want, or why do we need these faster payments? More of a want factor is just convenience. We want to send something and know that it made its way to the beneficiary. We don't want to wait 2, 3, 4 days for those funds to actually leave our account or get to the recipient's account. More of a need is emergency payments. Maybe there's a certain transfer that really you can't wait a week for funds to come in. It needs to get there quickly in order to take action on something. Also, from a business sense, just operational efficiencies. There's no lag time or pending payments. It can make things much more efficient when you make that payment and you know that that payment has gone through. No waiting 2 or 3 days for that to post. Competitive advantage. If other of your competitors can get funds there quicker or can receive funds in more quickly, you're just a leg behind them. And then just in time payments. Maybe there's an invoice that isn't due until next Friday. So instead of sending a payment this week to ensure that it's there by the due date, you could send that on the due date so you have those funds available to you until then. So benefits for customers. Many times these instant payments are available 24/7, 365. It's always available to you. You don't have to wait for banking hours or payment hours to be open. Like I said, better account reconciliation. You don't have those pending payments or waiting for things to post immediately. Real-time funding and real-time payment, general ease of use. And then in a lot of these senses, you can push and pull payment. So you can not only push a payment instantly to someone else, but you can request a payment from them in real time as well. So benefits, not only for for customers or businesses, but banking and governments. So just easier cash flow management. And a lot of our payment systems are very antiquated, so they're in need of modernization. So as this kind of trend for faster payments comes up, it's something that it's been a long time coming. It's needed, it's required. And then with that modernization, a lot more efficiencies are going to be gained. Transaction costs can go down. Also, there's more financial inclusion. So amongst the unbanked or underbanked, these faster instant payment solutions are allowing them to participate in that payment space. And then from a government perspective, and even from a banking perspective, there's just increased control and transparency by digitalizing these payments. If we were a cash-based society, there isn't much transparency or ways in which we can see those flow of funds. But as payments become more and more digitalized, that control and transparency is definitely there. So along with all of these benefits comes some challenges. So in order to realize those benefits, how do we get there? The biggest of which is balancing ease and convenience with security and regulation. Yes, we know that payments should be faster. We know that people want to be able to click a button on their phone and payments are there. But how do we make that easy and convenient for customers, as well as taking into effect combating fraud and making sure that all of the various banking regulations are being followed? Again, keeping up with customer and consumer expectations. As everything else around us is changing, sometimes the expectation is that we can change faster than maybe feasibly possible. In modernizing those internal and external systems, that takes time, it takes effort, it takes expertise, and it takes funds. So there's a lot of technology costs to implement these solutions. And in some cases, we're waiting for those solutions to be developed. And then also just taking a step back and not thinking about how we're doing things today, but thinking out of the box and how can we do things differently that'll make things easier on us and on our customers. I'm going to go into a couple of ways that domestically the United States has approached these faster instant payments. The first of which is same-day ACH. Same-day ACH used to take 1 or 2 days to settle an ACH payment. Same-day ACH was introduced in 2016. It did have limitations, both in transaction size, and it was also credits only. So ever since it was initially rolled out in 2016, there's been additional enhancements, not only to open up those windows or timeframes in which you could still submit a same-day ACH, but they started accepting debits as well. And then also that transactional limit has been raised every year. So last month marked the 5th year anniversary of same-day ACH payments. And since its launch, there have been 1.2 billion payments transferred through same-day ACH and a transfer total of $1.5 trillion. So a lot of flow has gone through this same-day ACH process. And like I said, they're continuing to evolve this. The next release is March of 2022, where that transactional limit will increase to 1 million, which will even more increase the use cases that people can use same-day ACH for. Going into why is there a need for ACH, or what are the most heavily used use cases? The most popular is payroll. So instead of needing your payroll file completely done, validated into your bank maybe on Wednesday, there's more flexibility to gather that payroll data, make sure that it's accurate and complete, and get that to the bank at a later time. Also, for any emergency payments, if you forgot to include someone within payroll, or maybe there was an error in your system, any of those emergencies or corrections, there's a lot more flexibility now that you can send those same-day payments. In addition, insurance claims and disaster relief payments, a lot of times there isn't that 1 to 2 day lag. Maybe the recipient can't wait that long to access their funds. So it allows a lot more flexibility for those types of payments. And then business to business payments remitted on due date. Like I said before, need for faster payments. Maybe you need that cash up until that due date. So it just gives more flexibility in your cash flows to allow you access to those funds. And then consumers making bill payments. If your electricity bill is due today, there's still a chance for you to remit that payment via ACH and have it get to your electric company without being charged a late charge. Another aspect is that in 2015, the Federal Reserve, they identified a need. There were a lot of other countries releasing instant payment solutions, and they're a little behind the trend. So they came up with a faster payments task force. This was a 320 member team from participants throughout the industry. And their goal was to research how other countries had implemented, identify and start seeing what solutions might be viable, and then identifying any gaps. So are there any infrastructure or industry gaps that we need to take into account in order to do so? And then how do we regulate this? What kind of rules, governance and standards are going to be affected by moving to a faster or more instantaneous payment solution? So it took them approximately 2 years to kind of do that vetting process. And then in 2017, they released their final report with recommendations. And in 2019, the Federal Reserve banks announced that they are developing a FedNow solution. So what FedNow is it's an interbank 24/7 by 365 real-time gross settlement surface with integrated clearing functions. This is not a fast implementation. There's a lot of factors in play, a lot of different aspects to consider. So while it remains a high priority for the Federal Reserve, it's not something that can quickly be done overnight. So I believe one of their statements was they are going to release it as soon as it is possible. So we have a targeted release date of 2023. As that deadline approaches further, we'll get more information on what exactly this looks like. But initially, they want to support the core clearing and settlement capabilities. They're going to use ISO 20022 standards, which I'll talk about later on in my presentation, to support interoperability. Again, supporting that institution shift from more of an 8 to 5 type payment solution to a 24/7 by 365. And then doing that and expanding those hours and making sure that those payments are instantaneous, making sure that there is fraud prevention and data security within those new models. Since this is a Fed product, it will only support domestic payments between US depository institutions. So again, it's just US payments being considered within this instantaneous solution. Now, I will say that the US is a bit behind where many other countries are throughout the globe. Part of that is the US has a long established financial system. And so there's a lot of antiquated systems, antiquated regulations that just need to be considered. While more developing country, as they're developing their payment system, they can jump right in with the newest ways of doing things, and they don't have to update those old models. So to look at a couple of samples of how other parts of the globe are implementing faster payments, first we're going to look at Europe. So within the Eurozone, they use SEPA. It's their equivalent of US ACH. They felt a need for this faster instantaneous payment solutions, just like the US. So in 2014, they established the Euro Retail Payments Board, trying to figure out, again, do that research. How do we implement such a solution? And what are we trying to solve for? 2 years later, they publicized their rule book. And 1 year after that, in 2017, they released their product of SEPA Instant Credit Transfer. Became operational in 2017. And at that time, it was the largest region of the world to implement a faster or instant payment solution. So what is this SEPA Instant Credit Transfer? How instantaneous is it? So it is a 10-second transfer. So from the time that remitting bank validates all the information is accurate and complete in order to complete that payment. They basically send out a call, a 10-second call to the recipient's bank, and they have 10 seconds to either accept that or reject that credit. And there's a hard timeout at 20 seconds. So it is very quick. It's very fast. And just like the US has implemented transactional limits, as of right now, there is a maximum of 100,000 euros that can be sent unless it's agreed upon by both parties that they're allowing for larger flows to be transacted between those two parties. Again, just like everything is evolving to in this world, it would be available, or it is available 24/7 by 365. Another area is India. So India's instant payment solution is called UPI, or Unified Payment Interface. So in 2016, still in line kind of with where the US started exploring an instant payment solution, they launched a pilot with 21 member banks. India is a little unique in their instant payment solution. So what they have is they have a single mobile application which connects all of these member banks. So as long as you are, your account is held at a participating bank and your recipient's account is held at a participating bank, you can move funds in an instantaneous fashion. So it merges the banking features from all of these various member banks. Again, it allows for transfers, both from a peer-to-peer perspective and from a bank-to-bank perspective. You not only can push the funds, you can also pull funds. So you can request a payment be sent to you, and then on the other end, they can either accept or deny that request. And if they accept it, those funds will move from account to account. Again, no surprise, but it is available 24/7 by 365, just as all of them are moving. So a couple ways in which these instantaneous payments are going to be evolving or happening. I'm going to talk about ISO 20022. Not sure how many of you are familiar with that term or what it is, but ISO itself is an international organization for standardization. It is an independent non-governmental body, and their newest release or standard is 20022. What this is trying to do is standardize global business communication. So making sure that regardless of whether you're in the US, you're in India, you're in Australia, there's a common knowledge of different pieces and parts of a business process, such as a payment. Just to give an example, if you're sending funds to someone, the account that you are crediting, it can be referred to as many things. That could be the recipient, the beneficiary, the crediting party. There's several different ways in which that vital piece of a transaction can be referred to. So this is really creating that business data dictionary of what those parts and pieces of processes mean and coming to a global understanding of what that is. So this will allow for information to be processed much more clearly and consistently, and also make sure that it is common language that everyone can understand, regardless of which country or even which institution you're a part of. Everyone would have a common knowledge of what we're talking about when we use certain words or phrases. It will reduce misunderstandings and inefficiencies tremendously and allow for more straight-through processing. So who's affected? Everyone will be affected by ISO 20022. It is definitely changing the way in which systems interact with one another. So not only are central banks, financial institutions, clearinghouses, and market infrastructures, but also regulators need to figure out, how does ISO 20022 standards affect the way that they're screening transactions for fraud or for other types of illegal activities. So technology vendors, so if they're releasing some sort of a wire application or any other type of business application, they need to be aware of ISO 20022 standards to build their system in a way that it can connect and comply with these standards. Also, private and corporate customers, just being aware of what ISO 20022 is and the types of impacts that it can have on you. So why is there a need for this standardization? The main thing is there's just many inefficiencies right now in communication and a lot of manual processes being done to translate data from one system to another, one infrastructure to another. So it's going to allow for that straight through processing amongst numerous markets, numerous systems. We're not only talking about systems from across the globe, but also there could be within one organization, there could be several different platforms that speak different languages or refer to the same data element in different manners. So standardizing that all so that there is way more interoperability and common language and understanding between those systems. What are the goals? So in the short term, we know that this is a process. It's not something that can be done overnight. There's a lot of systems and changes that need to take place. So right now in the short term, it's just the coexistence of several standards. And then long term, converging those standards into one integrated model, again, with that goal of interoperability. Future state, by the end of 2025, ISO 20022 will be the global standard in global payments. Just to give you an example, right now, much of the international wire flow is done through Swift messaging. So a beneficiary address can be a fairly free format of 4 lines of 35 characters. Instead of that more free format model, ISO 20022 standards is going to allow for that address to be broken out into components. So not only, we won't have the 4th address line, which is typically made up of city, country, and postal code, but those will be broken out into different data elements. So as you can imagine, as we ingest that type of information within our system, it'll be much easier to screen, report on, and just overall maintain. So much better data, much more efficient processes, and then new capabilities. It'll really lay the groundwork and the framework for new technologies and new ways of doing things. It'll just make much more interoperability. Again, uses an interoperability hub, allowing those unconnected systems and infrastructures to map to each other. So it'll serve as that kind of standardized solution. In many cases, your wire platform may not be completely ISO 20022 standard driven, but there will be code in the background or middleware that will be able to convert those into ISO 20022 standards, send that out into another platform, which if they're not ISO 20022 standard, it'll be able to convert on the other end. And in essence, those two systems will be connected and speaking that same language. So another way in which instant payments is affecting our global payment infrastructure is Swift GPI, or Global Payment Innovation. Sure, many of you have sent an international payment before and maybe had some of these questions, frustrations, or concerns. There's a lot of, there can be some ambiguity when sending a payment overseas. So just a few of these frustrations, why did I receive less than my invoice amount? I invoiced a customer in Europe for $10,000, but I only received $9,950. Where did that $50 go? How long did my wire take? What rate were those funds converted at? If you sent a payment in US dollars and you know that the recipient's account is in euros, what rate was used? How many euros did they actually receive? Why hasn't my beneficiary received funds yet? You let them know, it left my bank account last week. Not sure why you haven't received them. Where is it? Where is that wire? Who has that wire right now? And why isn't it being applied to the account? Also, if you sent US dollars and it ends up in the beneficiary's account in euros, who converted those funds? Was it my bank? Was it your bank? Was it somewhere in between? And then why did my beneficiary receive less than I sent? Again, it can be frustrating. knowing that you sent your full invoice amount, knowing that once it arrives at the other end, they received $30, $40, $50 less. So why is that happening? So what Swift GPI is it is somewhat solving this, this solution by providing an end-to-end payment tracking system for international payments. Not only does this allow for faster payments, but it makes everything much more transparent. I'll go into a few examples and actually show you this tool so you can see the value that it does bring, not only to banks, but also to you as end customers. There is within the tool fee transparency, also transparency into if the funds were converted and who converted those funds and at what rate they converted them. Also within this tool, there is stop and recall functionality, which can be used in the case of a fraud. Maybe you send out a wire to left your bank, but maybe it's being processed somewhere else along the chain. There is this functionality where we can do a stop and recall by a click of a button. And basically what it does is it halts that payment as long as that bank accepts that request and can allow that payment to be stopped much quicker than the models that have been used thus far to stop payments. So to illustrate this, first of all, these payments are fast. One of the ways or one of the reasons in which why they're fast, when you become a Swift GPI enabled bank, you agree to certain SLAs. And in most cases, you set a time frame in which on value date, you say, as long as it's received by this time, I promise that I will credit the funds to my beneficiary. There are some caveats. If you are holding the funds for maybe you need more information from your customer or you're awaiting documentation or awaiting some sort of a credit check, those things, payments can be held, but you also have to update the tracker stating that you are in receipt of those funds and you're holding them for whatever reason. So much more transparency. But as you can tell, this is a fast payment. I'm just going to walk through kind of what is being displayed on the screen. So this is a payment in which $7,830.02 was sent from a First National customer to a recipient in Slovenia. You can see that that payment passed from our system at this time with this reference. It passed through Citibank, then went on to Deutsche Bank, and then to that beneficiary in Slovenia. This full transaction was just under an hour. So what used to take days, for sure hours, many times we're seeing this done for sure in hours, sometimes in a matter of minutes or seconds. So it is definitely speeding up the rate in which these payments are sent. Another thing that's very transparent is you can see any fees that were deducted. So not only can we see the time that the transaction took, but we can see if fees were deducted and who took them. So in the case of the example earlier, when I said, you're paying an invoice, in this case, it's for $25,500 US. You're expecting the beneficiary to receive that full amount. They might call you up and say, hey, we were $40 short on your payment. You then call me as your international banker and say, where did that $40 go? Did First National take that fee? I can log into this tracker. I can look up that specific payment and see exactly who took those funds. So in this case, we can see that First National's deductions were 0. In this case, the intermediary bank took a $40 fee. And we can also see whether or not that beneficiary bank took a fee. So it arrived $40 less in Italy. And we can also see when those funds were made available to the customer. So much more transparency. There's no longer sending service messages or opening an investigation to try to figure out where those funds may have been deducted, but it's very visual and we have access to this information very quickly. In addition to fees being deducted, we can also see when an FX conversion took place on a wire. In the case of this payment, It was instructed as $4,166.50. Those US dollars were deducted from our customer's account at First National. But in many cases, when sending funds overseas, that beneficiary's account is not held in US dollars. Many times it's held in their local currency. In this case, it was being sent to Paris, France, and they held their account in euros. So if First National is not the one to do that upfront conversion, somewhere along the chain it needs to be done, whether that's by an intermediary bank or once it arrives at that beneficiary bank. They can't put US dollars into a euro-based account. They will need to convert between those two currencies. So in this case, again, First National sent those funds. It passed through an intermediary bank of Citibank. To further illustrate how fast payments can be, you can see that it took them 27 seconds to process this payment. It was very fast. That tells me that everything was formatted correctly. It was straight through processing within their system. They passed it on to HSBC Bank in the US, who then passed it on to HSBC Europe. HSBC Europe received this payment in US dollars. And down here on the bottom, I apologize, it's a little small, but you can see that they converted those funds from US dollars to euros at a rate of 0.84780,943, which resulted in the beneficiary receiving an amount of $3,532.40. Again, this is very valuable from a banking and from a customer perspective, because now knowing that that beneficiary does hold their funds in euro, it might be worth talking to your banker and finding out, is there a way that you can offer me a better euro price so that I guarantee that the full amount of my invoice gets there, or that you know upfront exactly the amount that's going to be transferred. There's no ambiguity as to what amount your beneficiary might receive. You can also see when there was a rejected payment. So in the past examples, that payment went fully through the process. We can see the green line all the way from First National all the way to that beneficiary's account, and we can show that what time and date that beneficiary was credited. In this case, it's a rejected payment. So again, customer calls me up and they say, hey, I sent this payment a couple of days ago and my beneficiary is saying that they have not received it. I can pull this payment up in the tracker. I can see that this $1,000 US dollars was sent on the 18th. I can see the path that that wire took. And then I can see that it did arrive at Royal Bank in the Cayman Islands, and it was rejected. I can see it was rejected at that date, that time. Not only can I see that it was rejected, so once I see it's rejected, I know that those funds are either back in my account or they're making their way back to my account, but I can also see the reject reason. So in this particular case, that beneficiary bank rejected it due to an incorrect account number. That allows me to tell the customer not only, hey, I see that that payment was rejected, but it was rejected for an incorrect account number. So please reach out to your beneficiary and ask them for updated banking details, and then we can resubmit that payment and make sure that it's successful. I mentioned before that this tracker, not only we can see things are much more transparent, we can see the path that the wire took, we can see fees that were deducted, we can see the conversions that took place, but it also has fraud prevention or stop and recall functionality. So as long as that payment is still in progress somewhere along the way, and we can see that it hasn't been credited, within a click of a button, not sure if you noticed it on another slide, but if this was still a pending payment, over here, there is a box or a button that says stop and recall. It's as easy as that for the bank to do and start that process. So instead of sending out a service message, which could take a while for the beneficiary bank to acknowledge, or picking up the phone and asking a bank along the chain to stop that payment, we can now bring up that payment, we can click that button to stop it, and then we can watch that payment being stopped and see at a very visual level where that payment is. So in this case, payment was initiated, customer called up and said, hey, I sent that to the wrong account. Is there any way that you can get that payment stopped? I don't want that to reach this beneficiary in Milano, Italy. So we went, clicked that stop and recall button, we can see that that stop and recall request was initiated. That payment was still being processed by Citibank. So you can see that they had accepted that stop and recall request. They accepted the request, and then they actually rejected it this time. So we can see it's rejected. We see that a nice red line right there. We know that that payment's no longer being further processed in that chain and making its way to Intesa Sanpaolo Bank. And so we have much more assurance that that payment has been rejected. We can even send this screenshot over to the customer, and so that they rest assured too that that payment has been stopped. It's no longer making its way through that payment chain. So what's next? I touched on it very briefly when I first opened up with this topic, but Swift GPI it's an add-on product to the Swift network. So First National is a Swift-enabled bank. We have our own Swift code, which enables us to receive international payments in a much more efficient manner. And so as a Swift bank, we can become GPI enabled. At First National, we decided to do so because we saw so many benefits in this tool. So as other banks within the Swift network are realizing those benefits and joining the GPI network, they will continue to update their payments with this type of information, which is going to make all cross-border payments much more transparent. And you're only as good as every participant in the chain. So as we're providing more and more data, we'll have more and more data available to us. What we're tasked with now, as other banks are, is we have this information internally, but what are we going to do with it? How do we put this information within the hands of our customer? How do we allow you to track your payments once you initiate them and see that same type of information as to how that payment's moving along in the chain? So that's something that we're exploring, building out those customer-facing solutions, trying to do so in a manner that is efficient for us and efficient for you. There's a lot of technology projects in play, so just figuring out the best way to do so. And then also, in addition to that stop and recall functionality, there are other pieces of Swift GPI other than tracking. So one thing is case resolution. There is a product out there right now for case resolution. So it might be when a payment is being held let's use India as an example. You send a payment, the payment's held in India because they're waiting on more information, maybe from a regulatory or compliance perspective. Maybe they're asking for more information about what is this transaction for, or we need to know a little bit more information about your customer, First National. What is their name? What is their address? They're popping up on some sort of a list screening. So we need to get some more data from you in order to process this transaction. So right now, what has to be done is we have to open an investigation and use Swift service messages in order to touch every bank in that chain to relay that information on. This case resolution functionality will allow for those banks to more efficiently communicate with one another, so that beneficiary bank could reach directly out to that remitting bank, get that information much quicker, and therefore credit that beneficiary much more efficiently. I've covered a lot of information. I could speak on Swift GPI or global payment innovation all day, but I'm just opening it up for questions or anything that anybody might have based upon what I've talked about, or just other questions in regards to global payments.
Thank you, Kalli. Again, I remind anybody, if you have any questions, please post them in the chat function. Kalli, we do have one to start off with related to, again, I would say interoperability, but do you think we'll ever see ACH type of system between the US and Canada?
I'm sorry, what was the last part of that question?
Do you think you would see an ACH type of system between the US and Canada? So if you could speak to just what you see from a global ACH, and then again, what ISO is doing with central banks and hopefully eventually interoperability.
Sure. So I guess from my perspective, there wouldn't necessarily, each each country has their own established system. So instead of starting something, new just to include US and Canada, it's going to be more of that interoperability model. So taking the infrastructure that's available within the US, taking the Canadian infrastructure, and figuring out how those two systems can correlate with one another. ISO 20022 is going to be vital for that because there could be data elements that are required in Canada that aren't required in the US or vice versa, or those specific data elements of a payment might be referred to something differently in the US versus Canada. So if both of those systems can comply with those ISO 20022 standards, it now allows those two systems to work together, and those rails could be used in order to remit a US dollar or an ACH payment from the US to Canada.
Another question is related to stop and recall. They're asking about the new functionality, and if you could explain the success or success rate of actually retrieving funds back during customer errors or potential fraud.
Sure. So from a bank perspective, we don't want this to happen. We don't want to have to stop or recall a payment. But the reality is that mistakes happen, whether it's falling victim to some sort of fraudulent attempt or just truly clicking the wrong beneficiary and then realizing it after the fact that I'm sending funds to the wrong place. Is there any way to stop it? So in the cases that we have seen with stop and recall functionality, I would say we've had great success. What used to take days or involve multiple people to try to get those funds back, now it's a much more efficient process, and it's very visual. You're no longer calling someone on the phone and saying, hey, can you stop this payment? And them assuring us over the phone that, yes, this payment's been rejected, it's on our way back. We can actually see that from a third-party tracking perspective. And so we know that the funds, they have been stopped. So we can much more confidently tell our customers, yes, they have stopped, and they're on their way back to us. No reason to fret any longer. Those will be back in your account soon. So I would say, yes, First National has had great success in that feature. Yeah, it's a great enhancement.
We've also got a few questions related about just the visibility of the tracker and kind of the data around it. Could you just kind of give your opinion or speak to, obviously, seeing fees and exchange rates, making that more transparent, the impact that could have on the industry as a whole?
Sure. So it's the reality of international business and globalization is that not every country has the same currency. So if we're sending funds to Europe, the likelihood of that account being held in euro or in US dollars is pretty unlikely. In many cases, it is held in the foreign currency. So it's bringing way more transparency to us. No longer are having to reach out to customers and have them contact their beneficiary asking, did you receive these funds? What rate was it converted at? In many cases, we have been able to look through a customer's account activity and advise them, here's all of your beneficiaries in which funds have been converted. We're able to back into how much was charged in those conversions. And in many cases, we're able to save not only them, but their beneficiaries money by allowing First National to do that conversion for them. And I think it helps our customers too in, they don't need to make the assumption of what currency that account's held in. We can now see that for ourselves. And again, we can show those types of screenshots to you to show you where those funds were converted at or that they were converted, just from an educational perspective, I guess, to know why that's being done and how First National could help in doing so. But I would say a lot of the larger banks or bigger players within the FX market, they were early adopters of Swift GPI. So they had all of this information at their fingertips before some of the smaller, more regionalized banks. A lot of them were able to capitalize on this quickly. So that intermediary bank that doesn't have a relationship with either the remitting party or the beneficiary party, sometimes they're doing that conversion and it's being done at not a great rate. So they don't have a relationship with either party. So they are just trying to make money on that conversion. And to them, it's just another transaction. Those are not customers to them. It's truly a transaction. So that's where, now that First National has access to this data, we can help to identify those opportunities and, again, present them to the customer in a more cost-effective manner.
There's another question that came through chat. It says, do all banks in the transaction need to participate in GPI in order for it to work?
Good question. And I would say yes and no. So there are certain stipulations required of a SWIFT GPI enabled bank, but there are also regulations that have come out for all banks that participate within the SWIFT network. So every bank within the network is required to let the tracker know or update the tracker with whether they have accepted a payment, rejected a payment, or put that payment on hold. As a non-GPI bank, they actually have 2 business days within value date to update that tracker. So yes, they're going to provide that information. They're just not going to provide it as quickly. Also, as a non-GPI bank, they are required to update the tracker with the amount that was credited to the account. They don't have to provide the any fees that were deducted or the conversion rate that was used, but having that crediting amount, you can back into that type of information. So yes, this information is there, but it definitely does help if all the banks within the chain are SWIFT GPI enabled, because again, there's just more data there and it's available to you much, much more quickly. From a First National perspective, as a SWIFT member, we knew that we had to comply with A, B, and C. So we decided to, we can update the tracker a little quicker. We can provide those missing pieces of information, because by doing that, we could become SWIFT GPI enabled and we got all of that data rich information that we can utilize not only for ourselves, but for our customers. So that was one of the main drivers for First National. It was kind of a no-brain type of decision for us. If we're already needing to comply with these rules, why not get the full benefit of the data that is provided?
I think that's important to say, is that all the banks have to comply. We can see the tracker where it's at, and if they're holding the payment, we just haven't done credit. But I think that's one of the things that SWIFT did very well, was make it, 90% of the community has to comply with GPI, which is why we're seeing a large adoption. And as most of you probably have heard, banks like us and all across the country are having massive upgrades for payment infrastructure, whether it's your back office or your treasury management online because of ISO 20022, which again is allowing banks to join GPI very quickly. And Kalli, I don't know if you have any stats off your head, but I think the adoption rate's much higher globally, but it's starting to pick up in the US as well.
Yeah, I believe that SWIFT almost monthly puts out new statistics, and it just continues to ramp up. I think as more and more banks are kind of joining this community, they're realizing the value of the tool, and banks talk. And so they want that same information that this other bank has, or they realize how they've been able to utilize that information within their systems to make their processes more efficient, bring value to their customers, and do better reporting. And so as that community continues to grow, that data gets better. And I think it's just exponentially going to increase.
Thank you, Kalli. That seems to cover all of our questions, and I appreciate your time and your information. This is our last session, so I do want to thank everyone for joining today. And I hope that you found the workshop series very informative. These sessions have been recorded, and they will be made available at a later date. But again, thank you everyone for coming. This does conclude our broadcast. Hope everyone again really enjoyed having the speakers here today, found it informative, and we appreciate the time you spent with us this morning. Have a wonderful day. Thank you.